Hi, I'm Al from the Money Study, bringing you another episode in our Take 10 Challenge, number 16, and all about that wonderful thing called tax and deductions, perhaps reducing our tax. But anyway, before we kick off, there's our disclaimer facts. It's all about figures, it's all about information. It is not anything to do with advice. I am not allowed to give tax advice. Now, I must admit, I was a nong with finance when I was in my 20s, 30s, and into my 40s. And so I don't feel too bad when I talk to a client and say, "What marginal tax bracket are you in?" And they look at me like I'm from a different planet. They have no idea what I'm talking about. And I say, "What marginal tax bracket are you in?" And probably if someone asked me when I was 25, I probably would have known the answer either. Basically, what it boils down to is in Australia, there are different tax thresholds, and as the income you earn goes over these different thresholds, you pay a different rate of tax. But remembering that it's not an increase in tax on the whole lot, it's just the excess over each of the thresholds. So, I mean, I get far too many people saying, "Oh, I'm not going to go and earn, do overtime because it'll push me into the next tax bracket, and all of a sudden I'm going to be paying tax at 37 cents of the dollar on that money." You can't ever earn more money and because of tax earn less. Tax is a proportion of what you're earning. So even if you go over a new tax bracket, it's only on the extra dollar or so that's gone over that next threshold that you are indeed paying an increased tax on. It doesn't change it over the whole lot. You will still make more money. Now, currently, and of course, here we are in January of 2024, with all the talk of the stage three tax cuts, these things are most likely will change on the 1st of July. But when we get to July, we'll worry about that. But in the meantime, it's just a case of understanding the mechanisms more so than even the numbers there. So if you earn less than 18,200 in a year, you pay no tax. You pay no tax. So literally it comes down to the situation that if you earn $15,000 in a year, you owe the tax department nothing. And it simply means that if you are working for someone, let's say you're working casually at McDonald's or whatever the case may be, and they do pay you, but they take some tax off you, then if you earn less than 18,200 total in the year, you can get that money back from the tax department. But you would have to do a tax return to basically say, this is what I earned, this is what tax was deducted. They say, oh, you shouldn't have had tax deducted, hence here is your tax back. Okay. Some people don't put in a tax return, think, oh, well, yeah, gee, I don't get caught out here. I'm going, what? You're earning only $10,000, get your money back. Put in a tax return. Now, between 18,201, just into the next dollar over 18,200, up to $45,000, then we now pay 19 cents for every extra dollar. But it's every extra dollar. So it's not like you're going to pay 19% tax on everything from 18,200. No, if you earned 18,201, you pay nothing on the first 18,200, and you're only going to pay 19 cents out of that first dollar. So your total tax bill would be 19 cents. Okay. Now, of course, once you get up to 45,001, up to 120,000, now we're into this 32.5 cents per dollar. So we call that the 32.5 cents in the dollar tax bracket. That's basically a percentage. So for every dollar, you're losing 32.5% of your money goes in tax over that 45,000. So it's a bit of a jump there from 45,000 to 45,001. But again, it's just that extra over the $45,000 that gets hit with a higher level. $120,001 up to 180. We're up to that 37 cents in the dollar, and what they call the highest marginal tax rate is anyone who earns more than 180,000. Now, Medicare levy needs to be added, and it's an extra 2%, but it doesn't cut in. I can't remember the threshold amount. It's around about 25,000 or so that Medicare starts to kick in. I think with the stage 3 tax cuts, they're planning to take that up to closer to 30,000. But anyone who's basically, earning, well, anything sort of above that threshold, you do need to add another 2% for Medicare. Then you've got the situation that, let's look at an example here. So we've got someone who earns an income before tax, so that's gross, that's when they talk about your gross income, that's before you have to pay your tax bill. And this person earns $60,000. Well, the first $18,200 is tax-free. And then the next 26,800, so we're going from $18,200 up to 45. We're paying 19% plus the Medicare, so we're paying that extra $5,092. And then from 15, and then we pay the last 15,000, the bit that's over that 45,000 is then taxed at 32.5. So we're then paying the plus the Medicare, so 34.5 on that extra money, 4,875. So you can see that our net income is effectively 48,800. So we've paid about $12,000 worth of tax. We've paid $12,000 worth of tax on a $60,000 gross income. So when you think of it in that terms, your tax rate is really only 20%. You've only a fifth of it is gone in tax, where even though you're in this 32.5 cents a dollar tax bracket, literally because the first bit was cheap, it was free, and then we're paying a lower reduced rate up until 45,000. So you're not paying 32.5 cents in the dollar on 60,000. Otherwise, you'd be up for a tax bill of over 20,000 if it's a third of 60,000. So therefore, it's a case that it's just every extra dollar is what is coming into account there. So can we reduce our taxes? Not as much as we used to be able to, that's for sure. Once upon a time, there are all sorts of wonderful little things that you could put on your tax return. But these days, they are becoming fairly limited. Some of the common ones, self-education. So if you're paying some for education to educate yourself for something, but generally speaking, be careful of this one. It's really got to be education for something that's useful for your income that you're currently generating. So if you're a plumber, you couldn't then turn around and claim self-education expenses to be a pilot, because that's got nothing to do with being a plumber. So the course that you do has to relate to the income that you're paying tax on. So that can certainly, so you can't sort of try and change careers and claim the self-education expenses until such time as you actually start earning money from those skills. Uniform and laundry expenses. We're talking pretty small fry stuff here, generally speaking. But I suppose if you're a chef and getting your clothes dirty every day, there could be some building up of costs there. Gifts and donations, as long as it's to an approved charity, keep your receipts and so forth. Raffles are not a donation, so you can't spend $30 on a raffle ticket and classify that as a donation, because it's not. It's a raffle. You're gambling effectively. So no, it's only a pure straight donation where there's no chance of you getting any money back again. You normally got to claim the deduction in the year of the purchase, which makes sense there. And of course, you can't make a claim on something you're going to get reimbursed by your employer from. So if you're going away travelling and your boss pays you for your evening meal, you can't then turn around and say that's an expense against my job. No, you've already been paid for it there. Generally speaking, keep your receipts. But these days, of course, because we tend to do most things on our plastics anyway, then it really is a case of we've got pretty good records, and if you do lose a receipt or two, as long as you can dive into your bank and show them, well, here, here's the money that I spent, yeah, you'd have a pretty good shot at getting them off your back. Not everybody needs to lodge a tax return, obviously, depending on their situation there, and if they're retirees and never likely to earn sort of taxable income going forward and so forth. So there's ATO's got an online tool. You punch in all your details. Do I need to lodge a tax return? Not a bad place to start there. These days, doing a tax return, I see people who just got one employer, no deductions, and yet they'll go to a H&R Block or an accountant even to get their tax return done. What for? Basically, these days, even if you're fairly financially illiterate, most of the information these days uploads. So as long as you've got a MyGov account, you go to MyGov, set up a MyGov account. If you haven't got one, get one. Go to MyGov, set up an account, link it, and you just link your ATO to your MyGov account. And therefore, what happens is when you come to do your tax return, ATO sends you a little message saying your tax return's ready to go. You click on it, and it automatically uploads showing you, the money that's in your bank account and what interest you earned, what you earned from your employer, any shares you might have had and dividends are paid, and all these sorts of things automatically upload these days, providing you've given your tax file number to your bank and so forth. So, which I'd suggest is a pretty good idea. And it uploads, and then effectively there's a couple of, you might have to fill, well, even things like your private health, which should automatically load up as well. So there's very few things on there. The only thing you probably have to do is if you've done some donations, and I'll say any of these work expenses or something like that. But it can be, for most people, pretty straightforward. You'd have your tax return done in 5 minutes, free of charge, and get your money in a couple of days. If people say, where's my tax return? Well, in theory, if everything's done correctly, there shouldn't be a tax return. The only thing you're going to get there is whatever deductions you might have had, which to say these days are pretty small. I believe you can still fill out a paper form. I don't know, but I'm assuming that's still possible to download a tax return form. If you haven't got a computer, I suppose it'd be quite necessary, but these days most people just do it online there. And of course, the one that gets a little bit tricky there is if you've got more than one job. If you've got more than one job, you do have to fill out what's called a tax file declaration form. What I think I'll do with that one, it's quite a bit difficult to explain. I'll do a little segment, do another little video just on the tax-free threshold and the paperwork, what's involved and why. Okay, I think it's a good idea to sort of separate that out from today's session. That's just a bit of a teaser about tax. Obviously, it's going to reoccur as we talk about investing and all sorts of other issues. We just can't avoid it. But can we indeed reduce it? We're not talking about tax avoidance. We're talking about tax reduction. Okay, but it'll come into our little stories and our little videos quite regularly. But as long as you understand your tax bracket, then when we start talking about what impact it has on people in that bracket, you'll know who that's you. Okay, let's talk again in another session.